is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 30th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here during this entire hour to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. If you can't dial in, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question and in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 326 points, printed at 24,906. S&P's up 23. That's up nearly 1%, trading at 2664. The NDX 100 up nearly 2%, 115 points. Russell up 6. The semis are up 20. The transport's up 35. It is mean and green. Not necessarily mean, but it is green across the board. Spot volatility index trading out at 1872, well below its 50-day exponential moving average. Gold is up $1, silver 10 cents, light sweet crude $1.33. Let's go out to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
I'm doing fantastic, Steve. How are you?
I am doing well also. And so I know there's a lot of cold weather going through the country, but how about California? Is that the polar freeze impacting you guys at all?
I hate to gloat, but it's actually very nice here. I was out on a hike this morning. It's probably it's in the 60s, just really pleasant. Sun was out.
Good.
Clear,
Glad to hear. Hey, you live there. You get to gloat.
I wanted to catch you this morning before you got on a roll.
Yes.
You kind of get going. I didn't want to interrupt your flow, so
no problem.
I was calling about U.S. Steel, and if you don't mind, just briefly, I'd like to kind of go over what I've been doing with the stock and the reasons that I bought calls on it.
Sure.
So I've spent last weekend. I've been doing some earnings trades with the options. And on this particular one, I was looking over the weekend, and I was just trying to find stocks that were going to be having earnings this week, and I found this. I liked it. I was lucky enough that the market was down on Monday. I got in. It got below 21, and so I bought the weeklies at 56 cents on the $22 calls, and then I actually sold those this morning at $1.12. I was considering maybe going back in something a little further. I did like it because on the weekly it came down. There was a low back in October of 2017 that it tested with less volume, and then it looked like it might have gotten above a swing point here on the daily with some volume. So if you could kind of give me your opinion on it, what you think about it.
Yeah, so I'm glad that you actually went ahead and took the money off the table on U.S. Steel. And the reason is because, so you mentioned the weekly time frame, and let's just stick with the thought process on the weekly time frame, Brent, for a moment. And folks, hopefully you're watching us on Tiger TV, and Brent had mentioned that he was comparing the price move down to the price move back in May of 2017. Now, that price move back was 74 million shares the week of May 15, 2017. And price got underneath that level. It did it both on December 17th, which was 48 million shares, and then the very next week, which was Christmas week, began December 24th with 30 million shares. So really kind of hard to, that week and then the following week on December 31st to know what the real volume was. But I would say it's a pretty good conclusion. It was less than the 74 million shares there. Now, no matter whether that's the case or not, what we can see on this weekly time frame chart here is a couple of different things. One, price has made its way up to a descending trend line that would begin, folks, and you can do this at home too. Just take the high of July 23rd, just take the high of November 5th, and you'll see the price is nudging right up against that. So you would know, even if you didn't have the weekly TAS market profile system on your screens, you would know that price was hitting a level of resistance. What Brett and I don't know is whether this is going to hold or whether price is going to break through this area. But what we also know, and the reason why I said, hey, I'm glad to hear that Brent went ahead and took the money off the table, is because what we can also see, and I'll turn these trend lines up, what we can also see is that price is moving right up into the top of its weekly market profile. Now, the week's not over. It's only Wednesday. So we don't know if this resistance level will hold. That top of the box is 22.57. The high today is 22.42. What we do know is the structure of that box is bearish. And what I mean by that is that the center line at 21.58 is much closer to the top at 22.57 than the bottom at 18.18. So I would go into the longer dated calls if price can break through this resistance, because it would be two levels of resistance that it would break through. Otherwise, I think it's a excellent move to take those profits for Monday off right here and to be patient and wait to see what takes place. Now, that's taking a look at the weekly time frame chart. I've got a slightly different trend line established right now for the daily. That could take price up into the 2309 level. But oops, sorry about that. But what I'm going to do is give. I'm sorry about that. I'm going to go ahead and give more priority to the weekly bearish structured box that we have up there. So that's what I see in taking a look at U.S. steel. On a monthly basis, I don't really see anything, that could really assist us. Or so does that help?
It does. I think what I'm going to do is just, they have the earnings are coming out after hours, after the market closes today. Let that play out and see where it's at, I guess. And if it might make a decent move off of that potentially, but I'll see what happens with that. And then I just wanted to thank you personally, and of course, Basil and Larry and Tom and just everybody for their help over the years with all the technical analysis and just different little, nuggets of information you've imparted on us. And it's just been very helpful as having a much better success rate in my trading than I maybe had in the past. And so
that's great to hear. Well, we all say thanks to you. So thanks for being a part of the TFNN team. And Brent, have a great day. Thanks for calling in. We'll look forward to speaking to you again soon. Brent in Martinez, California.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 305, S&P's up 23. Next question that comes in, this is from Phil. Phil writes in, says, hi, Steve, so we'll say hi, Phil. I have KL, that's the ticker symbol. By the way, KL is Kirkland Lake Gold. So I've got KL under 10. It is just completed or is close to completed an A to B equals CD on a weekly. Wondering where you would set a stop and target for it given profiles, rate of change, things of that sort. So with regard to market profiles, and that's the chart that is on your screen, you've got the daily, weekly, and monthly. And what each of us can see is that price is above resistance on each of these time frames. The bottom of the box on the or the top of the box, I should say, on the daily, which is old resistance, now support is 27.12. You're at 30.82. So you're above any kind of resistance that way. That means it's free to run. And with regard to A to B equals CD patterns, you know, on the weekly basis, if I were going to use the weekly chart, let me do this here. Let me go ahead and get rid of the trend lines, because that's really not an issue on this equity, just to kind of clean it up. Let me also just turn off the boxes, the market profiles. It just makes it easier, at least for my eyes, and especially for those of you that are trying to create an A to B equals CD pattern. And I admit it's a bit of an art. But part of that art is to look for where you see a change in trend on a weekly basis. For me, where my eyes go is not to the date of September 17th, because this was, in essence, when I say this, I'm referring to this box right here. I consider this to be more of a real consolidation area. And I'm not saying that's what Phil chose, but I just want to be able to address the question that somebody might ask right away, like, why didn't I choose the low of September 17th as the A point out there? So what I see as the A point for this A to B equals CD pattern is going to be right here. It's going to be the week of February 5th. Because from February 5th on, we saw pretty much a straight line move up to the high out here. Looks like it was the week of July 30th. That was 23.86. Yeah. So that becomes your B point. Then your retracement down into that September 17th, the week of. So we do use that. It just happens to be the C point. Now, if I do this, what we can see out here, and it looks to me like Phil's used different data points, and I could go back even further to go ahead and use that, but I'm just going to use these for mine. I'm going to use what Stevie sees out here and what I think you can see as well. And that is that using these data points for our lightning bolt pattern, we can see that prices hit the 1.272 expansion. But here's what we know about this. What we know is that this is a strong move along this C to D leg. How do we know that? Well, I know that. You know that by taking a look at where price is trading in relationship to that C to D line out there. When you're on the left side, which it is, tells you you're on the strong side. So what this tells me, and by the way, price will continue to move higher or lower, in this case here, higher because it's saying to be equal CD to the upside, will continue to move higher until you see some type of bearish reversal candle. It is that simple. H.M. Gartley left that out because at that stage, he wasn't familiar with Japanese candlesticks. I used to trade these things and just trade the one-to-one levels out there. And I got the schnot kicked out of me. And I do not like the schnot getting kicked out of me. You know what I mean out there? But what I do, what my dad taught me was to get back up. It doesn't matter whether you get the schnot kicked out of you. It's not how you get the schnot kicked out of you. It's not how you fall. It's how you get back up. So I got back up, and I wanted to understand this great pattern. What could give me the edge? Well, the edge was wait for the cavalry to arrive. So, Phil, at this stage here, at 1:22 in the afternoon on January 30th, this looks more like price is headed to the 1.618 expansion level. That's at 34.68 than anything else. Now, that doesn't mean there's not some potential problems in River City. What do you mean, Steve-O? Well, price is moving higher and doing it with less relative energy. Today is going to be day number 7 of that Tom DeMark setup 9 count because it's above the bar 4 bars earlier out here. Now, the last time we saw Tom DeMark set up 9 count, that was on February 14th. You saw a one-day knee-jerk reaction, price pulling back. The time after that, which was on the trading day of January 14th, you saw a 3-day pullback, little knee-jerk reaction there before price continued to move higher. So it's not today, Wednesday the 7th. I know today's the 30th, but I'm referring to the setup count, the 9 count, which, by the way, if you want to know this and you do want to know this, what you should do is just sign up for the free trial offer at Mastering Probability. Go through the workshop out there and learn a whole lot during the next 2 weeks as well. Maybe you'll like the subscription service enough that you'll go ahead and keep it, and then you'll be charged on day 15, but not until then. So you're not worried about Wednesday necessarily. You want to pay attention to Thursday, because Thursday would be day number 8, or could be day number 8. And it could be day number 8, 9, or 10. You don't see 10 on here because that's the day following 9, where you could see a short-term change in trend until price closes below Stevie's red line, which is green. That's very bullish, and right now it's priced at $29.47. There's really no problems in River City. Now, price is also moving higher, doing with less relative energy out there. So that's also just a cautionary sign. But all of that can be resolved out there. So you're in, I think it was a pretty decent price out here, just because, and it doesn't matter where you chose your A point, your B point, your C point, and then your D point, and you've come to a 1-to-1. The fact is the fact that there is no bearish reversal candle, whether it's a daily time frame chart, certainly a weekly, certainly a monthly. And if it were me, which it's not, I would stick with the trade. You're asking where to put a stop. Longer term, if this was just a trade, your stop would have to probably, your first place to make a decision point would be a close below Stevie's green line. That's $29.47 now. It'll be different tomorrow and the next day, but you kind of get the gist out there. So, a great trade, 2 great trades, Brent and Phil out there. Of course, we want to hear about your great trade, so just send me an email, steve@tfnn.com, or call in. I don't see any other questions out there, so let's kind of jump into the markets, so to speak. And by jumping into the markets, let's try to figure out what is the message of the market, right? You've got the Dow up 288 points out there. And if you weren't, which you are, a pattern recognition master, which you are, you would let the numbers make decisions for you versus looking for the patterns. Now, what is it that we know about that? And I think we should focus in on the Dow, don't you? Yeah, well, we're going to. And the reason is because that's where we've got a large movement, certainly large dollar movement out there. Let's try to figure out what is the message of the Dow. Now, I'm going to put this chart up on my screen right now. This is Dow Equity Futures, by the way, that we're going to take a look at. We're going to give more, I give more priority to this than the Dow Cash Indice. Now, I look at both, okay, most certainly, but the futures market is, you want me to tell the future, right? So this is really where it all is. Now, you've got price trade at 24,831, 830. Resistance is 24,830. So we're trading right at that resistance number. How do we know that that is resistance? How do we know? We're looking at the daily time frame chart. How do we know that's resistance? Answer that question. I'll go ahead and supply my answer when we get back from this break. This is Steve Rhodes with TFNN. We'll be right back. The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back folks. So the answer is because it was a Japanese candlestick reversal pattern that formed. So we were just talking, taking a look at one of those stock charts, Kirkland, I believe it was, and looking for, have the bears showed up yet? Then when they do show up, they will generate some type of bearish reversal signal. It's the first indication as to where you might find resistance. Well, on the trading day of January 28th, that is a bear sash candle. I closed below the open of the prior session out there, and it's the high of those two candle sessions that would become resistance. So it was the prior day, 24/8/30. And if we take a look at, go back to January 22nd, that was another bearish reversal candle. That one was the dark cloud cover. So that would have set the resistance level up at the high, in this case here, January 18th at 24,745 out there. Is it the high? Yeah, that was the high. So we're really right at resistance. All prices done today so far, as grand as it looks, it's just simply test resistance. Now, I don't know where the close is going to be. If it closes over resistance, well, then that's something to think about. But before we go on, let's go out to Jupiter, Colorado. Is that Jupiter, Florida? Let's go talk to Bill, and then we'll figure out where Bill's from. Bill, thanks for calling. Thanks for holding.
Hi, Steve. Yeah, Jupiter, Florida, of course, your neighbor.
Okay, all right. Okay.
Steve, I wanted to talk to you about a trade I did earlier and get your thoughts and really learn from this experience. So if you look at crude, CL.
Okay, crude oil. Okay.
Yep. I have my 10-minute chart up. And what I've been doing, along with the TAS indicators, which you yes, highly recommended, and they've been incredibly helpful to me. I've been tracking, doing a rolling 9-day average of high to low in oil, what the range is in oil. So taking the 9-day range and then looking at price action today, oil was at, retested its high at that 54.90 level a couple of times. And then if you look at on the 10-minute chart, if you look at a TAS box, you'll see kind of classic where the top of the box and the POC are fairly close together. And I said, this is it. And then all the other indicators, it was completely overbought. So I sold it at 54.79, and I think I'll get out of here around 54.50. I think that was a pretty good trade, but I'd like to hear your thoughts on that and what I might have done differently or what I would have added to that to be looking at.
Boy, what you would have done differently on a 10-minute chart, which is the time frame, folks, that is up on my screen. I can't see anything that you would have done differently. And so on this 10-minute time frame chart, folks, if we just come back to about 3:20 in the morning out here, one of the things you want to notice is where these profiles are forming. And for the most part, each new profile is forming above a prior profile, just simply telling you what you already know, which is you had a trend to the upside. You had a little bit of a hiccup in there, and that was at about 10 o'clock this morning when on a 10-minute base there was a new profile that formed. But the top of that profile was above the prior top and the bottom below the prior bottom. That kind of neutral-ish, if you will, but price never closed there below the bottom of a profile. Now what we're seeing is that the current bottom of that 10-minute box at 54.50 is where, in essence, the old center line of the box is. And so, it should be pretty strong support out here of 54.50. So from a 10-minute trading standpoint, if you were to see a 10-minute bar close below 54.50, well, then that would suggest that you've got to move lower. Now, our eyes would just simply immediately go back to a prior swing point area. And so I would be looking at the price point at about 10.20 this morning down at 53.76. But are you using anything other than a 10-minute time frame to make this? So first, I can't. It was a bearish structured box. You're absolutely right. The bears or the sellers, in essence, should have had because price holding in that area, the ability to push price down to the bottom. Hasn't tested it exactly, but very close to it. So inside this box, buyers and sellers are doing what they're supposed to do. We just don't know whether sellers have enough ammunition to roll over the buyers that are at 54.50 out there. But I don't see anything different that that I can see. So my question was, my question was, is there anything else that you use?
The 30-minute and the hourly chart, and on all charts when I took the trade earlier, everything was overbought. And then you had this negative box on the 10-minute chart, which is where I try to do my entries off of a 10-minute chart on the intraday trading. And I think there was a decent call. It's probably time to get out. But anyway, I get in really close to the high, and I'm never trying to catch the exact high or the exact low. But like you, and some of the things that I need to do with you as we go forward is to really learn to pick those intraday highs and lows, because they're great areas to trade off of, and they're much more, in my mind, and I'd like your comment on this, much more predictable and a much safer area to enter a trade from, either long or short, depending upon, whether you're selling the high or buying the low.
Well, the important thing is to, when you're trading, from my perspective, the important thing is to stay inside the time frame that you're trading. So if you're trading on a 10-minute basis and that's been working for you and you've been producing good results, and you stick with it. Hey, we have a saying around here, an expression that taking money is always a good thing. So that's you did the right thing. We cannot, when we start complaining about making money, man, then we got to get out of this business, so to speak. So finding the top ticker, the bottom ticker, or what have you, that's just wonderful if it happens, but not really a big deal. By the way, on the 30 and the 60-minute time frame, which I have up on my screen, I don't see any sell signal per se, but that's just in looking at profiles. There may be other patterns out there. There might be Rhodes momentum indicator top on those. I don't have that time frame set up yet on my charts here to be able to let you know. But just using profiles out here, I don't see anything. As far as other support on any pullback, let's say that the 10-minute profile were to fail from a support standpoint, and you're looking for an ultimate target to the downside, or perhaps ultimate support, what I would be using is that oscillator and change line on the daily chart. Now, it just so happens that today at 51.71, it's lining up with a level of resistance that had failed. That was the Tommy DeMark setup 9 count. That's this little green dashed line. That was the high from December 17th. That high was 51.87. So 51.87, 51.71, right around there on anything that would pull back. And I'm not seeing anything that says on a daily time frame that light sweet crude is going to pull back here. But if it were, you would look for support in that area. The daily time frame, actually, Bill, says that this changed again to bullish today, as long as price closes over 53.74, the top of that profile. So I would say keep looking for some long trades here at this stage. All righty?
Yeah, very good. And can I share one more thing? So
we're going to a break. You just got to hold on. Hang on through the break. Hang on through the break. Okay? We'll be right back. We'll be back with you in a minute, Bill.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Bill, do we still have you?
Yes, I'm here, Steve.
Okay, so go ahead with your other question.
Well, I was just making a comment, and I'd like to hear your thoughts. So, as I say, I use the 30 and the 60-minute for guidance and trying to pick kind of a general direction, and then entering on the 10-minute chart. But if you look at the 30 or you look at the 60, Navigator and Ratio on the TAS indicators are all maximum oversold. Overbought. So
Right.
That was an indication to me. And then there's also the magenta bars on Navigator on the 30-minute chart indicating a change in direction, which, although the 30-minute chart isn't showing any sell signal, the green candles are, it's off the high for sure. It's off.
Sure, absolutely,
It's off
absolutely.
20, 25 ticks off the high.
Yeah, everything that you say, I absolutely agree with, and I don't see anything different than you are looking at. So to me, you've got this totally under control in using the profiles and using them to your advantage. So kudos to you, and just continue to stick with it. Don't cloud your mind with other things out there when this is working for you.
No, very good, Steve. I appreciate it. The only other thing I want to do is get my time frames in a longer, do the longer time frame perspectives like you do. We had talked about it before. You started
Sure.
When you started your early trading days. For some reason, everybody focuses on the short-term time frame. Maybe it's just a little bit easier to do. I certainly am kind of getting it down, but I want to expand and get into the longer-term time frames as you do. So.
Yeah,
Thank you.
short-term time frames are cool because if you're a pattern recognition individual, you can test your pattern recognition skills out on shorter time frames. It's just you need to stay inside that time frame for your trading targets, exits, things of that sort out there. So, hey, Bill, thanks so much for calling, and we'll look forward to speaking to you again soon. That was Bill in wonderful Jupiter, Florida. We've got a question that has come in here from Marvin. Starvin Marvin wants to take a look. I said, good morning, Steve. I'll say good morning or afternoon to you. He said, I want to know the Fibonacci projection on the weekly chart for advanced micro devices. AMD is the ticker symbol. So let's take a look at that, and let's specifically go to his time frame chart. And you're looking, you say Fibonacci projection. So if we just look at the Fibonacci tool, which is just really a retracement, and hopefully, Marvin, this is what you were asking for. We're going to start from the high on September 10th, the week of September 10th, 2018, and then go down all the way to the lowest low, which took place on December 24th. Nothing unusual there. And what we can see here is that price is really trading with inside the range of 0, the low. And you can see that, in essence, it was a double bottom, so to speak. Really not a double bottom, but a retest of the low. The reason why we can't call it a double bottom is because, or at least I don't believe, because we haven't really tested on a weekly basis the top, the double top out there to maybe say that this is nothing more than a consolidation. But first, to answer your question, 22.95 is a 0.382 level. That has held on a closing base on a weekly chart out here. That generates our consolidation for us, low-level consolidation. Doesn't tell you or I whether it's going to break to the downside or it's going to do a further retracement to the upside, which would be the 0.618 retracement, and that would be 27.22. There is no A to B equals CD pattern that is present as we take a look at it, and that's because the low of the week of October 29th was similar to the low of the week of December 24th. So there's really no A to B equals CD pattern out here. So that's what I see from a retracement standpoint when we take a look at AMD. If that didn't properly answer your question, just write back and we'll make sure that we do that. So thanks for writing in. No other questions at the moment. So let's go back to the markets per se. And let's go. We were taking a look at the Dow, is my recollection out here. And so one of the things that we did was we said, hey, we're going to pay attention to 24,830. We're not going to let price action, the stuff on the tube, or anything cloud our judgment. We're just simply going to identify. One of the things that you and I must do always is identify support or resistance out here. You and I are taking a look at resistance. There are many ways to do that. Bill and I talked about market profiles. You and I look at those. That's one tool. We can also look at the candlestick signals out there, especially when they are near pattern completions. Well, what we know about the Dow equity futures contract or the markets is there are A to B equals CD patterns out here. For the Dow, it looks like this. We just put it on our screen. 24,528 was the 1-to-1 projection. 25,062, the 2.272 projection. We use these as guidelines, not that price has to hit that exact level out there, but we're looking for the range. Once it gets into that 1-to-1 level, as the Dow equity futures did on the trading day of January 18th, you start being somewhat cautious. Now, we can see that the C to D leg inside the Dow equity futures contract is on the weak side. Remember, we took a look at one equity out there, and we saw that price was on the strong side. Here, it's on the weak side. Why? Because it's on the right side of that C to D leg. Would sort of say to me, 1-to-1 may be all you're going to get, give or take. Well, the very next trading day, that's January 22nd, that was your first bearish reversal signal to suggest that the pattern had completed. What pattern? That's the Gartley sell pattern that is out there. Prices move sideways. We then have another. Now, by the way, on the trading day of January 25th, what was that doing? Testing resistance. Resistance of what? That dark cloud cover candle from January 22nd, which was really the high, the resistance of January 18th. That held. Then we get a bear sash candle, January 28th, 24,830 is resistance. What has today done? Done nothing more than just test resistance. So believe it or not out here, with regard to what the Dow is doing, as good as it looks, there's still a Gartley sell pattern that is in place, and all we've seen is a test of resistance. I don't know where it's going to close at the end of today's trading session. Maybe in 11 minutes, Fed Powell's going to come out with something, and price is going to take off. Well, if it does, and you close above resistance, price is headed higher. To where? Hey, it could be 25,062. It could be 25,742 out there. I don't know. What else do we know about today? in the tools that you use, that you've adopted to help you identify the message of the markets. Bill mentioned the short-term timeframes. Like reading any book out there, you read paragraphs and sentences. So those are the short-term timeframes out there. The book itself, the larger book, we look at chapters or maybe the entire book. Well, if we take a look at some of on a daily basis, we stay inside that time frame. You have loved that Tom DeMark setup 9 count. You like that power of 9. It just makes sense because I was born on September 9th out there. I love the power of 9. And what is today going to be? Today is going to be, or should be, I don't know where it's going to close, but right now, as long as the close of today is above the day from bar number 5, that is a trading session of January 24th. Today's going to be number 9. Something to think about. Reversals don't have to, but reversals can happen on day 8, 9, or 10. I wonder what the wave count is today. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So just to kind of summarize out here, we were taking a look at the Dow because of its performance today, but what we identified is that there's still an active Gartley sell pattern that is in play. And if we were to take a look, we're not going to, you just have to trust me on this. If we were to take a look at the ES Mini, the Russell 2000, and the NQ, they also all have Gartley sell patterns that are in play. So caution is warranted. Can't guarantee that we are at a top, but we certainly have confirmed patterns out there. And so today's close will be important. There's a question about a stock. EVR is the ticker symbol. So let's take a quick peek at that just before we head off the air here in about a minute. That is for Evercore. And the question is it setting up for a short? And if we take a look at the weekly time frame chart out here, and so the weekly time frame chart, the answer is it's potentially yes. Now, when I say potentially, what am I referring to? Well, price has gotten up to where it should have and found resistance, and that would have been from the week of October 19th, 2008. That's that little green dashed line that goes across the top of the screen out here, if you can see that. But just look at the week of October 19th. That was the Tom DeMark setup trend line. So prices hit that. Not until price were to close over that level. By the way, on October 19th, I believe that high out there is 92.69. If price were to close over that, then no. There's no short setup at all. In fact, it would say you've got momentum to the upside. But at this stage, prices hit resistance. Do you have the short signal on a daily time frame? You don't just yet. If we take a look at the daily time frame out here, you know, you've got to move higher with some looks like with some volume behind that move out here. You've taken out trend lines on a daily time frame. So price could continue to move higher, but from a weekly standpoint, price ran for EVR right into resistance, which is held thus far. Folks, stay tuned. Your favorite polar bear, David White's up next. He'll give you all the details on what the Fed decides to do or not. I'll see you back here tomorrow on Terrific Thursday. Thanks for being here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.